Hi, and welcome to Options Discovery on John Lothian News. I'm your host, Cortez Draper, and on this program, we'll embark on the fascinating world of options and learn from top professionals in the field. Today, we're diving into the dynamic world of retail options trading, a trend that is reshaping the landscape of trading and investment strategies. Retail options trading has seen a significant uptick in participation since the second quarter of 2020. Retail traders accounted for 26% of notional value traded on C1 during that period, up from 16% in the first quarter of 2020. This trend has continued, with retail participation climbing to 31% in the fourth quarter of 2023. eToro has released the findings of its retail trading and options study, which offers valuable insights into the activity and motivations of American retail traders. Let's explore some of the key highlights from the survey. Since the COVID-19 pandemic began, 62% of retail options traders reported an increase in their trading activity, while only 5% stopped trading options altogether. This surge reflects a growing interest and engagement in the financial markets among retail investors. One of the primary motivations for retail traders to participate in options trading is to diversify their portfolios. According to the survey, 32% of retail traders are using options to diversify, rather than seeking out potentially big payouts. This indicates a strategic approach where options are used as a tool to manage risk and enhance portfolio performance. Retail options traders are not limited to equities. Outside of equities, these traders are most likely to invest in cryptocurrencies, showcasing a growing interest in digital assets. Additionally, 65% of retail traders invest in stocks, 41% in crypto assets, and 28% in bonds, demonstrating a diversified investment approach. The survey also highlights an increased participation of female traders in option markets. Notably, 46% of women surveyed began trading options within the last 3 years. This trend indicates a positive shift towards greater inclusivity and diversity in the trading community. When it comes to risk tolerance, the survey shows an evolution among retail traders. 61% of participants reported that through their trading experience, they have come to understand the risk of options trading and feel they can comfortably mitigate downside risk. In contrast, only 15% feel less comfortable taking risk, highlighting the growing confidence and sophistication among retail traders. Younger generations, in particular, are more adept at applying their trading experience to manage risk. The survey indicates that 74% of traders aged 18 to 34 and 71% of traders aged 35 to 44 feel that their experience have helped them mitigate risk. In comparison, only 53% of traders aged 45 to 54 and only 48% of traders aged 55 and over have reported the same. This suggests that younger traders are learning quickly and adapting their strategies to improve outcomes. And there you have it, a comprehensive overview of retail option trends and the evolving dynamics in this space. Retail traders are increasingly sophisticated, strategic, and diversified in their approach to option trading. Their growing participation is shaping the future of the market, bringing new opportunities and challenges. To understand the deepening implications found within this data, let's talk to Brett Kenwell, current options investment analyst at eToro with a wealth of experience in the financial industry. Brett's extensive experience and deep insights make him an ideal guest to navigate the complexities of this market. Brett, thank you for joining us today.
Yeah, thanks for having me.
Of course, one of the first things that really stuck out to me in this research was that 62% of retail options traders have increased their trading activity since COVID-19 pandemic. So it wasn't just like a quick 1 year they got in and got out. This is something that's played out a little bit here. What factors do you believe have contributed to this rise?
Personally, I think there's a lot of factors involved. Like you said, during COVID, a lot of people, they're at home, there's nothing to do. You can't go out, and all of a sudden you're seeing, these explosive moves, especially out of the COVID lows, but really for the next, year and a half, we saw such giant moves. And, when you look at, that was just in the stock price, just when you look at the options, they were really, really explosive. And then you had the whole The whole short squeeze bonanza kind of drawing in the retail crowd. And, that probably didn't work out well for a lot of traders, but they kind of got that itch. I think they got in there, they got a taste of it. They saw what they could do. They just had to, learn how to kind of control the outcome a little bit better. And unfortunately, you can't control what happens once you're in a position, but you can control a lot of dynamics going into those positions, position size, the timing. And of course, you're always free to exit when you feel it's right to do so. But I think a lot of people just got that itch. And of course, other factors play a role too. Social media plays a huge role. I think the number was about 82% said that of the respondents in that survey said that their social circle had an influence on, they turned to them for inspiration. And, the social circle is pretty wide. It can be anything from, Twitter to, friends and family. So, but, you see people making these giant gains or, hey, I like this setup. I'm playing it with calls or puts. And I don't know, I think other people say, that sounds kind of good. Maybe I'll give that a shot. So it's obviously a big learning curve, but I think that COVID stretch kind of inspired a lot of traders.
With that dynamic taking place, having to understand and learn more about the market, from that period of, increase in volatility in meme stocks, how do you think the role of the retail trader has evolved in options markets over the last, few years here?
The fact that from a brokerage standpoint, the game has changed quite a bit. Going back, when I started trading options, about 12 years ago, 13 years ago, it was not phoning in my orders to a broker. It wasn't, that long ago, but, you were still paying like, I don't remember. It was like maybe $7 to $10 a side. I remember actually moving to a broker that charged like $5, $5 a side in $5 in, $5 out. And thinking like, wow, that's a cheap commission. Now, I mean, God, if you pay a commission anymore, it's like unbelievable. It's unheard of. You don't pay commission just about for options. You just pay, a lot of times per contract. But that's changed from a commission standpoint, but the liquidity has also changed from a big standpoint. A lot of the names, maybe if you went back 5 or 8 or 10 years ago, the spreads were a lot wider, the volumes were lower. And the moves were more volatile as a result. Now you have, volatility's been so low that cheapens the options, but the spreads are tight. There's a lot of liquidity, and that makes it easier for retail traders. I think, and in my opinion, it's easier to get in, easier to get out without getting ripped off on some of these spreads. And I think the landscape has evolved also from the offerings. We didn't have same day options, that long. It was a pretty new product, to be honest with you, and some things come and go, but same day options, they're not going anywhere. They're too popular. They do too much volume, and they make too much money for the business side. So, same day options, I don't know how much further, I don't know where that expands to in the future, but the industry, speaking just generally of the options industry, will continue to innovate. That'll probably be, options on, I imagine, the crypto ETFs. I wouldn't be surprised if we started to get possibly same day options on other assets. S&P and NASDAQ are kind of the big focus, but that kind of makes it easier for the retail investor to participate. Doesn't mean they're easy to trade by any means. Zero dated and short dated options are very difficult because of the volatility involved. But when you can go into, say, a Fed day or maybe more recently either like a CPI or PCE day with so much focus on inflation, or earnings, I guess to an extent you can use the shorter dated like the Friday weekly expirations. But I mean, if you wanted to just participate just for a Fed day, you can do it with a zero dated SPY or SPX option. So I think things like that kind of draw in retail because you don't have to have these just these monthly expirations or quarterly expirations. The innovations within the options industry has made it so much more, accessible to the retail investor. Doesn't mean it's made it easier, but more accessible for sure.
The survey showed that portfolio diversification is a primary motivation for 32% of retail traders. Can you elaborate on how options are used for diversification?
Yeah, that number stuck out to me. I was really surprised to see that actually was the top response for why, when we, at least for this set of retail investors, but when we polled them, asking what's your primary motivation for it. It was portfolio diversification. And I would have thought it would have been, more, I don't know, maybe for lack of better words, more YOLO. I would have thought it would have been more, looking for the home run, looking for the big trade, the big payout. And, that scored, high too, but not as high as diversification, which really did surprise me. And that can, come in a lot of different forms. That might just be, in some investors' eyes or some traders' eyes, that might just be, I have a portfolio that's 80% S&P and I want to just sprinkle in a little bit of speculation. It might be a trader who, instead of is taking a common stock position, might say, well, you know what, for a much smaller, much lower price, I can buy, two contracts of this. And, even if it goes to zero, my max risk is defined, and, that I can contain that risk. I like that approach better, so that a diversification can be anything. It could be, it could be hedge, so I think it just takes on a lot of different forms. That's the pros and cons of options. And, I think that probably played into the answer. And I was also surprised in the survey that credit spreads came out as a favorite strategy over long calls. Cause I would have thought, again, kind of sticking with the big payout thesis, no one's getting a big payout on credit trade. That's the equivalent of, going for single base hits, not a home run. So, and that's great. I'm a big fan of people not going for the home run, and trying to hit base hits. But, I was surprised felt like a very mature response to the survey that I wasn't necessarily expecting.
This is kind of going off the point too a little bit that, I don't know if there's a stigma maybe around the retail, option participant, is that, less sophisticated and they're trying to only go for the home runs and they're only trying to go for that. But you really see, a diversification. We're really taking into consideration risk here, and we're taking into consideration, probability of things finishing, at the money or, in the money. And so it's interesting to hear that incorporation of diversification and risk management there with utilizing different type of strategies in the market. And so Etero's findings also indicate that retail traders invest in various asset classes, kind of going off of diversification here. But why do you think cryptocurrencies have become so popular among these traders as well?
A lot of traders, and we've looked at, various surveys beyond this, but beyond the one we're focused on right now, but various other surveys and responses from, even other brokerages, that a majority of options customers, and it's not a surprising statement, but they don't start in options. They generally come from equities first. But it makes sense that a lot of, because crypto has become so popular among the, the younger trader, the millennials, and the 18 to 34 group, I guess I would say. Crypto is such a popular asset class, and a lot of people, believe it or not, started trading in crypto before they even started trading in stocks. So that's becoming an observation that we are finding more and more common every day. And but previously it was not. It was most common for investors to go from trading stocks to trading options. And so now it's not that surprising that they're starting in crypto or starting in stocks. It's not saying one is better than the other, but they're starting in an easier to understand asset class, and then they're moving to a more sophisticated, trading vehicle, which is options.
As you say that too, I think of cryptocurrency already having this like volatile nature to it, and you got
Yeah.
to kind of be ready for that with options trading. And so if you participate in cryptocurrencies, you might be already kind of used to your position and your portfolio size really changing dramatically over a couple ticks,
Yeah. Yeah. It
Yeah,
helps to have a strong stomach. And the crypto traders definitely, especially the ones that have been around for a while, they have a very strong stomach.
exactly. And so another thing that was interesting in the survey here, especially because I think, when people, the stigma, another one around finance and maybe the business industry, is a male dominated type of industry. And the survey highlights that there's an increase in female participation in options trading. What are some of the factors that you think might encourage more women to enter this market?
Yeah, I think, it's just a continued evolution of the space. I would almost say it's investing in general as well. I think we just have more equality spread out across the workplace, across everywhere, across incomes. And naturally that extends to, capital markets, to the investing landscape. It's, the barriers to entry are for investing in general, I'm not speaking just for women, just plain in general, the barriers are lower than they've ever been. There's been more information than is even you can't even digest the amount of information that's out there. There's an overload of information. It's social. It's become such a big thing on social media, whether that's more traditionally on like FinTwit, financial Twitter, or if it's on TikTok now. So um, it's women feel empowered to be involved in investing. They should feel empowered. And the industry welcomes them with open arms. I mean, it's just the barriers are so low now that anyone can get into it. It just takes, at this point you download an app and it just takes a minute to be involved. So it makes sense. It makes sense that women are starting to make up a larger percentage of the investing world.
But what are some of the unique strategies younger traders might be using that differ from older traders?
I think this is where sort of the social element plays such a role. And it's interesting too, because, when eToro, first started, it was based on this sort of social element, which, social media has become such a big role in trading, whether that's like I mentioned, a few different platforms earlier, but, with our on eToro, we actually have like a social feed. It kind of looks like a Twitter feed, embedded in there, and you can like follow different investors and they can lay out their thesis and, from, at least on my end, I can go through those feeds and see, the interaction on there, whether, you almost can kind of use it as a sentiment gauge where, people are, really disagree or, really blindly agree with your, not blindly, but, like overwhelmingly agree,
Yeah.
with one thesis or another. And it's just interesting to sort of see that interaction on an investment thesis, because it wasn't that long ago. I feel like I keep going back in time in this conversation, but
Yeah.
it wasn't that long ago. You had no one to share your ideas with or
Yeah.
get feedback with other people. And, going outside of eToro, you know, there's all sorts of different platforms, even if it's, not even social media, it could be, blogging sites and, financial news sites that have, contributors and guest authors and things like that. So I just think that the younger investor has, not that they have more access, but they're maybe more savvy with the access that they have. They're more willing to, go watch a couple of YouTube videos and learn, because when I learned how to trade options, I had to read a book, and then go like get roughed up in the options market. Now I
Yeah.
feel like you can watch some YouTube videos and read some articles, and there's a wealth of information out there, and younger investors know how to access it, and they know how to access it in an efficient manner.
Yeah.
And then like we talked about earlier, the advances in the just in the options industry in general with volumes and spreads and things of that sort, I think really help them out quite a bit.
For them to feel comfortable, what do you think has helped them gain that confidence?
Yeah, when I looked at this answer, I kind of stepped back to one of the stats, the observations you pointed out earlier, which was that 62% of respondents have been trading options more since, the pandemic, which, at this rate is going on 4 years, which is wild enough. But, they got a taste of it, whether it ended disastrously or ended amazingly for them is going to vary by trader. But, I think the reality is that they got a taste of it. They kind of learned how they worked, whether they completely understand the underlying mechanics of it, I don't know, but they, at least from an experience standpoint, they understand how options work. And, you know, the risk of options is a con, but it's used in the right way. It's a pro, right? So like knowing that, like say you have say a long call or a long put, the worst case scenario is that thing goes to zero, which if you put your entire account into it is like an enormous negative. It's an enormous con. But if you
Yeah.
size that, if you have a $100,000 trading account and you have $500 of calls, your max risk is 0.5% of your account. That's a very reasonable, manageable amount of risk. Whereas the upside is, case of a call, technically unlimited, but you can you can see significant upside with a measured amount of downside. You already know that risk. It takes a lot of the stress, a lot of the anxiety out of that case. Even though that's not a known outcome, the worst case outcome. And just sometimes knowing that, I think, is an enormous way to manage your risk. And it can be extrapolated to other strategies too. Credit spreads, you already know, like, the spread minus the premium is going to be that's your risk. So
Yeah.
knowing your max risk is, I think, one of the biggest advantages to being involved in options, because, when you're long, whether it's futures or, common stock, you might have a stop loss in mind, but that doesn't mean, just because you have a stop in mind or you even have it placed, that doesn't mean that's where that's where your execution is going to be. So there's sort of an unknown with that. But with options, there is ways to definitively limit your risk. And I think that's where the best risk management tool lies with them. It's just the sizing part that a lot of younger traders, I think, get wrong.
Looked a little bit about the trends here. How do you think the continued growth in retail participation will shape options market in terms of regulation and market structure into the future?
I think it'll keep growing. It's actually been kind of a quiet year for growth, just when you're looking just purely at the volumes. But, I don't think that that's necessarily a surprise. I don't think it's unreasonable. I think when you look at these different themes and these different, the moves we're seeing, and maybe it's just me, maybe it's an anecdotal observation, but it almost feels like everyone expects bigger and faster movement than they previously. Like if you had been, whatever, however many years ago, if you were like, oh, I, made 10% this year. So I'm like, oh, it's a great return. Now I feel like traders expect 10%, sometimes today, but like this month or this week, and when you look at like thematics like AI and you're seeing these explosive moves, I mean, the stock prices alone have been, out of this world large. And especially when you look at the size of when you look at an Nvidia that goes from, $1 trillion to $3 trillion in a blink of an eye. And then you look at the options and some of the, especially when you look at the options flow, more so that's, related to the institutional side, but you see those continued heavy flows going into these names, and it's generally supportive of their price, but it also just shows how much of a vehicle that traders, whether it's institutional or retail, are really flowing into some of these more popular names. And it doesn't have to be popular names, but I think retail sees these moves and then they see the move, which is just a multiple of that when it comes to the option, and they go, well, I want to participate in that. I want to be involved in that. And I can't blame them. No one, I don't think anyone blames them for that. So I think it's just going to continue to be a growth driver in the space.
Looking at something like Nvidia, when we seen it, the stock, really do tremendous returns. And previously, before the stock split being $900, $800, it may be hard for myself to want to participate in that. And if I do, it's going to take a lot of my capital to do so. Whereas I can buy a couple, options contracts and participate in this growth that we're seeing all over the space. And so I think that is very true. The correlation between just the growth we're seeing all around in the market is going to also be trickled into options as more people want to participate in that continued growth. And so this leads me to think too, what are some of the common misconceptions retail traders have about options trading that you would like to address?
When you get involved with options trading, I feel like helps answer what your experience is going to be like. And almost one of the worst things that can happen is you get in the middle of a raging bull or big, huge uptrend, which is great at first, but it will give you a false sense of confidence and a false sense of understanding, thinking like, oh, I'm just going to buy calls every month or every week, and they're going to double, triple, quadruple, whatever, whatever they do at that in that time frame. But when you hit choppier, more difficult markets, that's when a lot of the pain is realized. And it doesn't even have to be, I'm not talking about a rolling bear market that, plays out over months, quarters, years. Even as something as simple as, back in April, we had a 5% correction in the S&P, which is very routine. We get, three corrections a year on average of 5%. And, but if you're buying a lot of options, but a lot of call options near or at those highs, 5% correction, especially if it's a short dated option, I mean, you could be wiped out completely. So, it's timing plays such a critical role for options traders, but I think sometimes newer traders, and I understand this because it was me myself, you get sort of lulled into thinking that it's easy, or that, you have a little bit more control. Like you think, oh, I'll be able to, if these fall, whatever, 40%, I can stop out. It's no big deal. Well, 40% can come off the top of an option in a couple of minutes if it's short dated. So, or if it's, if it's this Friday, I mean, it could come off 40% could be in a second. So I think, traders kind of get lulled to that, sort of lulled in that false sense of confidence in the beginning.
Yeah, I think that's so huge. Because it's very, like you said, it's very easy to think that you know everything just because things are going your way, right? If you're making money, I must know what I'm doing here because I'm making money. But really, these tools, these instruments are very complex. You know, we talked about volatility and time, and there's so many components that go into it. And if you first start off and you're just playing a little bit and you get some confidence and you think you can, you just keep upping your position, putting more of your life savings and your, stuff that you've been working hard for into it without fully understanding. There can be some, very detrimental downside risks that you're taking on. And so I completely agree with that, that some of the worst ways sometimes to start off is having a really great first run because you start building this false sense of confidence. And so kind of going off of that, I wonder what advice would you offer a new retail trader looking to enter the options market? Maybe how would you tell them to start their approach and how to go about this process?
Man, and I would say, God, a lot of things.
Yeah.
First, don't stop learning.
Yeah.
Just keep educating yourself, whether that's, YouTube videos, that's books, that's, sources on Twitter that, you find not like like a guru, but like, someone who really knows their stuff. It doesn't even have to be giving you ideas, just sort of showing how options work, showing kind of understanding how they can play a role. And I like to say, options are a tool in the toolbox. They're not, I don't think that they fully for a lot of traders, I think that this would apply. And for some traders that can trade options at a more advanced level, not so much maybe, but for a normal retail investor, it's just one tool. They shouldn't necessarily be used all the time. There's nothing wrong with being long common stock in instances instead of being long options or short puts or whatever, your preferred strategy is. And kind of on that note, size is everything in the options world. Position size is, I think, one of the most critical components to not blowing yourself up, to not, crushing your account. Because whether, we just talked about, buying a bunch of calls, at the top and then a 5% correction wipes you out. The same thing could be, oh, for months and months, I keep selling, I keep selling puts, because we just keep drifting higher or staying flat and it's just easy, quote unquote, easy money. And you're picking up that credit until we have, a correction in that stock or unexpected event that, sends prices lower. Next thing you know, your broker's issuing you a margin call because you got to take, 500 shares or 1,000 shares of something that you have no business being long. So, position size is absolutely everything. And the other one I would say is if you don't know, like if you're unsure, just don't do it. And if you don't know, if you don't fully understand, oh, like how does this credit trade work? Or what's the, whether it's a binary outcome, there's so many different unknowns, but if you truly don't know, if you don't know what you're doing, just don't do it. There's always an opportunity to learn. There's always another trade. You'll always have that chance again. There's no really once in a lifetime situations in the options market.
A lot of people want to watch the videos like this is how you make $1 million in a week. This is the trade to do to make this money. But really, a lot of the learning should be focused to just how does this work? How do traders trade? What techniques and indicators or whatever it may be to help them interact in the market to help understand this instrument rather than just this is the money maker. Just understanding the role and the dynamic of the space itself. I think
Yeah.
diverse. Yeah, yeah. Uh-huh.
On that note,
Yeah.
some people, some investors will say, paper trading or draft trading is not a good thing because when you don't have an emotional attachment to the outcome, you don't have a real feel for trading because you put in fake money on the simulator and the outcome is if you lose, you're like, oh, who cares? And if you win, you're like, oh, great. But like in real trading, it doesn't feel that way. It's unfortunately your emotions play a much larger role.
Yes.
And a lot of brokers, though, I don't agree with that statement so much, especially when it comes with options. I think it's a great tool to learn sort of how the mechanics of it work. It's not going to tell you necessarily, it's not going to explain to you how it works, but it will show you through experience. Like it'll show you when you buy a call, 3 weeks out and the stock stays flat, how it loses 70% of its value. Like you will see how it happens, and you'll see when volatility expands and contracts and what that does to an option. Even when you're right, sometimes the option doesn't move, even at all in your favor. So I think draft trading and or paper trading, whatever you want to call it, I think that plays a big role in, or can play a big role in helping people kind of shorten that learning curve a little bit and just get a feel for how these things move. Because it takes some practice definitely to get the feel down.
Of course. And I like that too. It takes some practice for someone who's never learned and doesn't know anything about the space. Well, why throw all your money into the space before you learn it? I'm an athlete. I played football in college, and for people who say paper trading is not good, you shouldn't do it. That would be like us going into our first game and never running a practice. Well, we don't want to. We want to take the emotion out of. This is not how it's going to be in the game. So let's not run any scripts or scrimmages beforehand, because it's going to be not real to the real game. And that's not the truth. You need to learn the plays. You need to understand the dynamic and what you're planning for, and understanding the right times to, utilize different strategies. And I think it's very true for paper trading. I'm very on your side as well, as that you should utilize those tools to help you practice, understand the space, so you have a more confidence and you can kind of alleviate some of that emotional pressure when you actually do, trade with real money. So I think that's a very important point there. And then continue off some of the other advice you had, the diversification piece. Like, doesn't have to be the only thing that you use, as a covered call, or, utilizing, so, you have outright underlying positions already. You can use these on the side to maybe get some more exposure, limit exposure. So I think that's very huge as well. And position size, of course, understanding, your risk parameters, your downside risk. I think all those points were really excellent for someone who's tried to dabble in the space, learning about the space. I think those are very huge points. And to that, Brett, we appreciate your time and insight into the trends of retail trading and options. Your wealth of experience and expertise has provided a unique and enriching perspective, contributing significantly to our exploration of the dynamic world of financial options. Thank you for being a part of Options Discovery.
Yeah, thanks for having me. I look forward to doing it again.